The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Let me just put the right month going in here. There we go. So right here at noon, Dow's up 7 at 22,126. S&P is just down a little bit, down 1 at 24.95. You got the comp index down 7 at 84.47. The VIX index is up a little, up 6 cents at 10.64. This is going to be very interesting. You see the E-mini right now in leg C, the Z contract. I've got it in Chapman Wave 5. It's still going up on 5. I've got it in leg C. It should make a D, holding really well, just down $1.75. And the composite index has gone recycled to either an old E or a new B. If the MACD has a chance to cross positive, and it'll only do that if there was about another, I'd say another 15 to 17 points higher. Maybe it's less. I'm going to say 15 to 7 points higher. Then it will recycle higher, and that'll make it emphatically a B. But until then, I'm going to give it the alternate count. And we've got a peak G stalling motion right here in the 120-minute chart. And I've got very strong support in the 24.87 to 24.85s. Let's see what happens here. I have to tell you, I was really impressed when I worked over the weekend on all the different chart patterns. I think we're going to go higher in the short term. Let me show you why. We're going to go to the Dow. The Dow is trading right now up 8 at 22,126. This is it'll be an extension of 22,134. Yep, it'll be an extension of leg C if today it can go above 22,134.57. Otherwise, it will be a peak C, but the way the MACD is crossed positively and the stochastics rally strongly, I like what I see. I like the chance that the patterns we've been looking at is the 9-period moving average holds as fabulous support in weekly charts, and then it pushes to another test of the left side high and even breaks it to the upside. That'll be very impressive. And in the month of September, if the Dow actually trades in the 22,250s or higher, preferably higher 22,300 area, that monthly chart, Doji, could turn into a very big support level with last month's low of 21,600 being absolutely key and perhaps even holding all the way through the month if we go higher here. And any pullback coming next week really holds a 21,950 to 21,820 area. So that's what I'm looking at. Near-term support, we've got 22,070s to 50s, and resistance is all the way to 22,179, the all-time high. Let's go to the S&P, SPX.X. The S&P, same thing. It made a new all-time high. It is in leg F/B in the weekly chart, has extended leg D in the monthly. Dow hasn't yet extended its higher, going to a higher high than in August, but the S&P has. And it's a leg C in the daily, and that portends higher prices. Doesn't say how high. Other techniques do that. But in this particular instance, it's down 1 at 24.95. Very impressive. QQQ, the NASDAQ Index 100 trading vehicle, kind of stalling out here, down 17 cents at 146.05. The all-time high is 146.59. It's just an eye blink away. But Apple is pulling back, and Apple's down $2 at 158.88. Somewhat disappointing news for Apple owners, that is Apple stock owners, but so far it's holding pretty well. 9-period moving average is at 156 in the 9-period moving average of the weekly chart. Let's see how it holds over the next 2 days. I am expecting, for my opening call subscribers, the reason why we switched to the long side of the Dow was that fantastic move that started on Friday. I'm sorry, that started on Monday. And what I am looking at is within the context of the different markets, we're expecting a kind of a regeneration of energy from yesterday's close into tomorrow morning. In the Dow, some choppiness, just a kind of a breather. Then it should go to a higher leg D. I'm also thinking that the QQQ series, because it has Google, Amazon, Apple, and it has some of the stocks with the leaders before, are actually taking a well-earned, a well-timed breather as other areas. What areas? Wow, look at the XLF, the financials, stupendous move, up sharply since the lower, just above this in the 2370s, now trading at 2481, up a point. But more importantly, what we're looking at is it's unchanged right now. There seems to be a rotation into some kind of new leadership. I'm going to look at the oil services in a moment, questions about it. So what we've seen in this particular market is that as major resistance comes into leaders, so the laggers start to, so it goes from leading to lagging. And that's the way you keep this balance, like the scales of justice. Think of the left side and the right side. You've got the scales, and you're always trying to keep a balance. That's what you're looking at here. Right. So the XLF is holding well, but it really needs to get into the 2520s to say, hey, we've got sustaining strength, not just near-term pop, but sustaining shorter-term strength. Maybe going to intermediate term, we'll just do one step at a time. Why did I like it? Because the TLT bonds, 20-year Lehman Treasury Bond Fund, I got a peak D in the daily chart at 129.57. In the Chapman wave methodology, what we look for is those fourth highest peaks. And what does it mean? The fourth highest peak, let me just get this right here. I hope the chart is there, because that's what I said we will do. So there it is. Right there. So the fourth highest peak means simply that we try to identify the lowest, most obvious low bar, count each successively higher peak, alphabetize them, uppercase A, B, C, D, E, F, and G on the way up, and lowercase on the way down. But at the fourth highest peak, peak D, other things happen. What did we see? We saw the peak D right there in TLT, big pullback on the 11th of August, recycles higher, goes to another peak D at 129.57. Now the Chapman wave upside, the up channel inside track support zone is being tested. The MACD's negative, stochastic's negative. I think that we've got a pullback in the bonds, a rally in yields, and we've got a crude oil right now moving very nicely to the upside, up 75 cents at 48.98. I'm going to get to the oil service in a second. One of the reasons why in our portfolio that we have for my subscribers, we have the Dow long, we have a bank stock, we have an order stock, which is just, I can't believe how well it's done. We have a commodity index. We really have a nice mix. And so far, I'm pleased to say at about 6 or 7 stocks, all of them are positive. Now, let's look at the crude oil. It says that crude oil, if it breaks the 49.75, 50.30 area, that's the resistance. Actually, I'm giving it a little room for the weekly chart to break out a little bit more. It's testing the resistance in the weekly chart. Same thing with the USO. We'll be back after this break. We'll look at gold and silver. We'll look at platinum. We'll look at a lot of other things. Look at the biotechs. We'll look at semiconductors. And we will look at oil service industry. And there's that USO testing resistance at 997. Used to get to about 10.12, and then it's breaking out. I'll be right back. Basil Chapman. Guys up, I need to sit these down. We'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So a question came up, Suncor Energy, where someone in the den talked about it the other day, liked it very much. I said, yep, it's acting very well. It's fantastic. Made a peak E-top back in August, mid-August. Pulls back sharply and does an exact, and a left side, right side price time match based on the doji candle right there around about the 22nd of August. And it went right through that in a Chapman Wave cup and ladle formation. And this is either a brand new, not an R, who put the R there? Must have been me, huh? And not an R, but an F/A. F could be very negative. A is very positive. So I do not like to have this kind of equivocation. No. As far as I'm concerned, the MACD and stochastic are really strong. I'm going to be very conservative. I'm going to call this double top right here at 32.78, 78, something like that. I'll be there in a second, as a Chapman Wave phantom peak. And I'm going to go here and call it an F/B with an emphasis more on the B, but at this point I'm writing it as an F/B. But the MACD and stochastic are great. The weekly chart is improving tremendously, and the monthly chart has actually gone to, maybe I'm premature here, I've got it with an up arrow, and that implies both in the weekly and the day that they should go to C and D. I'm just going to leave it like that for now because everything about it is really positive. By the end of the week, I might have to change my mind. But Suncor Energy trading at 33.59, up 21 cents. Really nice action. Now I've got to look at the gold. Gold made a peak E-top. I don't know. I haven't put the down arrow because I have to wait for the end of the day for the close to see if it closes underneath 1331. And if the MACD crosses negative and the stochastic continues down with on-balance volume, then by tomorrow I'll put a down arrow and implies that there's a sell mode in the daily. That doesn't say, oh, sell mode, you're going all the way down to any. It just says the characteristics right now have met all the criteria, that is if I put a down arrow, for a sell mode. You could reverse back up. I'm just explaining. It's like when people say, oh, the market's down 20%, it's in a major sell category. That's just to say that at that particular point it is. The next day it could turn around and go up. This is just an explanation. Other things are saying to me that gold is probably going to test the 1305 to 12 97 area in the next 2 weeks or so. And yeah, this is the reason why I'm looking at it. See, silver's finally pulled back a little bit, held quite well yesterday. Also potential peak E, but it hasn't got a down arrow yet. And the weekly chart is in a leg B, very good, but I'm looking at 17.36, down about another 40 cents from here. That's the real test. In the interim period, look what happened. The dollar is up 47 cents. And I've been talking about for a few days now. I said, I'm anticipating that there's going to be a short-term tidal change. And that tidal change is going to see yields go higher, bonds go lower, the dollar rally, the euro, EUR-USD, pull back from a potential peak E, and the USD JPY, which is the dollar Japanese yen currency pair, rally with the dollar. And look at that move. I mentioned it yesterday. Nice move, going from the 107.31 area, and right now it's 3 points higher at 1.10.63 just in 4 days. That's very good. Monthly chart still looks terrible. The weekly chart is improving for a bounce, and this could turn into maybe a 2 week, 3 week bounce. We'll see. So that's why I'm looking at that. Let's go back to the crude. Didn't want to go to crude oil. I want to go to platinum. That's what I need. So platinum right now pulling back. Now I knew there was going to be a problem right with this particular chart. It's gone to a peak C, and it'll be a peak C minus. There isn't any way I could call it. Yes, I could. Whoops. This should have been, sorry. I knew there was an issue with this, and I meant to get back to it. Never did. Pay the penalty for that, so I can't give you. Now I can give you accurate information. There's a good chance that this is a peak G, and it's going to be pulling back copper at 980. Sorry, platinum at 981. Looks like it wants to test 967 to 960. The 200 period simple moving average in orange, and the light grayish 967 is the 200 simple moving average. So that's what I'm looking for. And the other thing that's important right now, I didn't do the IBB. IBB is the biotech. It's just holding here. This is the longest we've seen a high-level consolidation in such a narrow range in the IBB in a long time. Trading at 334. It needs to break out above, was that 337 something? 336.72 was the high that was made. 336.72. That was a high of 2 weeks ago, and it hasn't yet broken out. MACD's excellent, stochastic's excellent. It just cannot find that upside strength. So let me do this. The SMHs, that's the semiconductor index, acting very well. Just off a new all-time high. It made a peak E/B. I'm going to make that an E/B. In the daily, yesterday, if it goes above yesterday's high, it continues that. It's in a leg. I'm going to spend some time on this. I've got this as a leg C buy mode in the weekly chart. That's really positive for the general market. But I need a little time to see if this instant restart. Over the last 3 months to 4 months, I've found that these little ones right here turned into an actual instant restart, Chapman wave instant restart. They went to a D or an E. So this should be G/C. This is now leg D. So I'm going to give it a little time to say, I'm not 100% sure, but it's excellent action in the weekly as the MACD is just about across positive. We've still got to go through Friday before we can say. Stochastic still weak at 77%, needs 80 plus, and is leg D in the monthly chart. So I had a question. This is really a great question, and I'm not sure I'm going to be able to answer it right this second. So, is this the time to be putting new dollars to work in a 401k? Is this the start of the coda phase? So the coda phase, I've always talked about it as being split into two halves. We've basically, as far as I'm concerned, we're into maybe into 2/3 of the way at this particular stage of the actual coda phase. And there are a lot of things that I've been writing down that I have to remember to watch to see when we're in the final stages of the coda. And I don't think we're even close. So I'm going to answer that question for subscribers over the next couple of days. I don't want to make anything, I don't want to make a statement here that could be misquoted or that I am leading myself into some kind of a trap. I believe that the market is saying that the monthly charts still have a long way to go, number one. Number two, I believe that before we get that big final phase, and I'm not I have a terrible time here because I'm not sure yet whether it's going to be during the Trump era when the Boston Globe had they made up a fake news. That everybody jokes about the fake news. They made up a fake news front page that had Dow at 6,000 or something, or Dow drops 3,000 when Trump gets in. Just a whole slew of things, and I believe that is really hubris. That kind of smacks you in the nose. The trading gods are sitting there saying, ho, ho, Boston Globe. That was not a good thing to do. That's got nothing to do with politics or anything. Well, maybe for them it does. For me, it only has to do with the fact that it was mentioned as a major, major catastrophe, and it has certainly not been. I think the market is up a little bit since November of 2016. So I'll be back. Dow's up 7.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, a couple of questions I had, a couple of statements. I made a mistake. It missed by 2 cents so far. The SMHs have not made leg D in the monthly chart. It's still peak C and trading at 89.63. It needs to get to 89.73. I've got 72 here. Yes, 89.73 to start a leg D. I think it should do it. We'll see what happens. Okay, so a whole slew of questions came up. I'm going to just see, let's see, I had a question about not being able to see the stochastic. Oh, no, you should be able to see everything right there. Oh, unless you're looking on your cell phone, I would check mine, but I think you should be looking, it should be good. Now, let me do this. I want to go to what's working, what's not working. I don't think gold is working right now, and I think that gold just needs a breather. I look at it longer term, intermediate term, let's say. I like what I see, but I'm a little concerned that the last run-up was an emotional run-up that essentially was a play more on the weak dollar and some international market nervousness. So that says to me, maybe it's time, maybe it's not price, but if you really look at the dollar, and this is just like, you've seen this movie umpteen times before. What is the difference? Have a look at this the weekly chart. Remember, I discussed that left side, right side price time match. Well, it did it to 34 weeks up, 34 weeks down, and that 34 weeks down went right to, let me see if I can find it, right to last week. Last week, it took out the 91.92 low of May of 2016. It just took it out. It went to 91.01. And now there's an inside bar so far. It's not a big deal. But the difference here is that the MACD histogram has been improving. That's the vertical lines. It's still under the 0% line, but it's still improving. The green faster moving average is flattening out, trying to turn up. But look at the difference in the stochastic in the weekly chart, where the stochastic has been rallying since that trough F right there, the week of the 4th of August, hitting 92.55, and now look how much it's improved, and look at the relative strength index going from oversold to kind of a little bit better. So that's saying to me, if ever there was a bounce, because it hasn't got the V-shaped pattern in the stochastic as you can get right there, or a cup formation, this is still very flat. It says it could be a bounce, and I can only treat it as a bounce for the dollar. The monthly chart is really not good. This is a single leg down, a single leg A, all the way from the high of January of 2017 at 103.82. And look at this. This is just an A. Now, there are times where a single leg down or an A and then a little bounce and another and then a leg B, and then it concludes, could give you a fantastic rally. I just don't know yet if the dollar can do that right now. So I'm just saying that the 89.52 200-period moving average in the monthly is kind of a really important icon, a way of looking at absolutely key support. We're a point and a half higher. And at this particular stage, this is the opportunity for the dollar to have this arch formation turn into another little arch formation, but it could go all the way to 93.70, maybe even 94.20. If by the end of the week there is no further pullbacks, you can't break under 92. You're at 92.38. Now, 30 cents is nothing in this business for the dollar. It needs to get into, well, I know what it needs to get into. It needs to get to the 93s, but on a very short-term basis, it needs to break above the candle of the 5th, 92.73 is that high, and it needs to close nicely in the daily chart above the 9-period moving average, 92.14 support, and try to get to 93.14, the 9-period moving average in the weekly chart, 9-period moving average of the weekly chart. So next question is monthly count. Yeah, let me do this. I'll do that. I did that already. So, Bob, XRT, which was a horrible index. This is a spider S&P retail because it had Groupon, GPS Gap stores out of something or other, Francesco Clothes, SHLD. This is Sears and Sears Holdings, etc. Burlington and DSW, I think that's shoes. And all of a sudden, it's got a fabulous move to the upside. In fact, it's in a buy mode in the daily, making a left side, V-shaped left side or a deep cup, left side, right side price time match. Whoops, that's not an N. There's no N's in the Chapman wave notation. That's a C. and it's trying to go, and I would draw it right here. How would I do the plumb line? I'd go to this peak right here, and it's probably even ahead of that. Yeah, it is. Wow, that's very interesting. So this is a retracement, a sharp retracement to the upside. It's a day. There you are. So yeah, it looks like it wants to go above the 200-period moving average of 41.48. It's at up 53 right now, and it's got the same trough F pattern in the daily, in the weekly chart that suggests it is trying to have a rally of substance. That's just going to be a rally that goes from an arch formation maybe to a smaller arch. Now, this is going to be very important. Why? Because if you look at GPS, which is Gap Stores, I believe, you have Gap Inc. up A, B, C. It looks exactly like the XRT, but the weekly chart is much stronger and the monthly chart is much stronger. So maybe, remember I spoke about this I'd say 6 weeks ago. No, maybe more. I said about 2 months ago that the RTH, the Retail Market Vectors ETF, had held well if you look at weekly and monthly charts, but not on the daily chart, and that it had dropped from the 84 level to the 77s. Not a big deal, but it did suggest that at that point retail was being hurt by Amazon. But now look at Amazon, and this is going to be so fascinating. Look, Amazon's struggling here. It's at 988. It's up 5.81. It's way below the 1,083 all-time high. Peak D daily, peak D monthly, and a G/C still very positive in the monthly chart. So I'm watching this and I'm saying, you know what? I think that the retail area is actually going to do much, much better than people think. And look, Macy's is up A, B, C. It's in leg D, up 46 cents after plunging down to just onto 19.5, and here it is at 22.68. Is it the start of something bigger? I don't know, but I'm just saying on a short-term basis, and good reflex action on a weekly basis, Macy's needs a lot more work, but that is good. So now I had a question about right there. All right, now we're going to go to RIG. Beautiful move, leg C in RIG, which is Transocean. And Transocean trading at 931, up 53 cents, up 6% right now. Here's it. Oh, look how many charts. Even the retail area, the charts look exactly the same. You see, this is that part of the rotational correction I'm talking about. As you've got weakness in maybe the IBB, you've got weakness in some of the high-flying stocks, some of the high-tech stocks. Look what's happened. All of a sudden, money is flowing into the oil service. Now we're going to take the next segment. I had a request. Could I look at a number of the oil service segment stock? And that's exactly what we do. Basil Chapman, Tiger Education's Hour, Dow's up 5, S&P down 1. I'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. We're back. Dow's up 15. S&P's now up. It's a relentless market. There's no question about it. So, RIG, trading in leg C. I suspect that the support now for RIG, Transocean Limited, oil service, is at 867, the 9-period moving average, but actually just on the very short term until it makes a D, I think 892-ish, that area should hold. So it's acting very well, and we go one step at a time. The daily goes to a D, see where it pulls back. Maybe that becomes peak A. And then within a week, if it goes even higher, that extends leg A. If it doesn't, it becomes peak A. And then you want to see what goes even higher. But the monthly chart is really horrible. So this is what I would call a counter-trend bounce. Let's treat it as that. Let's go to MRO, which is Marathon, I think. Yep, Marathon Oil. Let's see a question about it. Made a peak F top back in August in the low 13s, and now it's gone all the way down to 1050 something. A, B, C. It's in leg D as well. So we're talking maybe short term, no, near term. There could be a little bit of a pullback, but so far this is a nice kickoff to an attempt. And MRO trading at 1188, up 29 cents, needs to break into 1320s. That's a long way to go. It's 10% from here before you can say, now it's established some decent kind of a base. FCG, question about that in the DAN. FCG is First Trust Natural Gas ETF. Oh, nice. I remember this from a long time ago, then completely off my radar. Leg B right now, I'm going to just put a plus sign here, although it has all the characteristics of a buy mode, but I'm just going to hold off a little bit because the weekly chart is only still in leg A, acting very well. FCG, 20.33, up 54 cents. Nice move. It needs to get into the 20.83 to 21.06 area, and then you will see strength increase in the weekly chart, and that's what you want to see. Supports is a 1680 to 1650. Nice action, but it needs to get into that candle of the 28th of July, 2173. Once it's above that, that's a new ball game altogether. So we've gone through some of these. This is NBR. A lot of people asked about NBR. NBR is neighbors. Yep, neighbors. There you go. They all have the same kind of chart. Dailies are very good. Weeklies are just starting to move higher. A hint of turning around, but nothing more yet than a hint. And the monthly charts are terrible. The monthly charts also suggest a 50% retracement max before a deeper pullback. So NBR at 7.21, up 36 cents. These are nice trading stocks, I think. I would say in leg D, it would make me nervous to really go whole hog in. We'll look at hogs in a minute. But in fact, you could start your position here, just a nibble, trying to place about, I would do it at about 5% pullback. No, that's going to be too. Yeah, I'd like a 3 to 5% pullback. 3%, let's say a 3% pullback on these before I really wanted to start the entering in the longer position. But you could nibble here just to be in case it takes off. And one more will be HP. HP is not Hewlett Packard, but HP is American Paint. Oh, I haven't seen this one for a long time. A, leg B, it's the same thing. They're all doing the same thing. Leg A is in the weekly chart. Monthly chart looks terrible. Yes, this is in a leg B. I would say, based on the technique that I use on the MACD and stochastic, I would start a position here at 49.12, but I really would actually build the position in the 47.70s if it can get there. So in case you miss it completely, yes, you want to put your foot in right now. Okay. Now the next thing I want you to do is natural gas. That was a question in G. Oh, look at that. Very nice move. Very quick. A to B and a leg C about to come in the natural gas. Needs to go above 3.088. At 3.089 goes to leg C. Very nice action. It is. And support is at 2.999 to 2.992 at this particular stage. Okay, next question was the OSX. Is that dollar OSX? OSX? Yeah, the OSX, which is the one that I said I don't usually look at, Philadelphia oil service sector, because I look at the OIH, which we'll get to, is in A, B, C. So let me double check. A, B, oh, what am I saying? It's A, B, C, D. No, I have to check. Sorry. A is 121.05, 120.06. Yep, I am. I'm correct. So this is another leg D, saying just a little bit of tad. But remember, when you're coming off major lows, you could make 2 series or 3 series of Ds because you're coming off major lows. So don't be scared by the D coming off a major low. Just say, hey, at D, we might get a pullback. That's the 4th highest peak. Just be careful. That's probably where you want to start looking for an entry point. That's all. So next question was, so the OIH, yeah, it's the same thing. OIH, that's the other one. It's the one that I usually use more than the S&P. This is the Van Eck Vectors Oil Service, leg D. Same sort of thing, leg A. Oh, remember we spent all that time talking about this channel. It's one of the reasons why I said I quite like it. Although for some reason we don't have it, but we have a commodity index that has the oils in it, so it's playing very well. But look, that downtrend, remember what I spoke about, that narrow little tube going down, a little worm going, it looks like little bounces from the bottom to the top with lower lows and lower highs. Now's the first breakout. And I can just tell you, if the OIH closes about 26.38 in the next week and a half, that's very positive action. All right, so we've covered oils. We were done with that. Now the next thing is, yes. So a good question. Is the S&P narrow top? Well, I'm pretty sure I'm going to go through the same scenario, that when we get to Dow leg D, I probably will think about implementing some kind of a short, even if it's just a trading short. I'm thinking that there's a chance, there's just a chance. I don't want to even say that there was emphatically, but there's a chance I might trade our position now in the diamonds, push it into my weekly chart and say, look, for those of you looking out, weekly charts, even if it could pull back 2 points, 2% or 3%, I want to hold it, but we're going to trade the short side. So there'll be 2 trades. There'll be an intermediate term trade and a short-term trade. That's kind of what I should have done a long time ago. I thought about it, just never really implemented the thought. Stupid. It was really stupid. That is all that I can say. It wasn't a clever decision to think of the shorter term as leading. It's the monthly charts that are still very strong. So the answer to the question is, yeah, I could implement a short position when I get to D. Maybe it's options expiration Friday, whatever it is. I don't care. Whenever it is, maybe, but I'm treating it this time as a short-term trade. So we've got one more section to do, and I'll be right back. The Dow's up 15, S&P's up 54 cents. Basil Chapman, target conditions. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Hope Steve's back again. I'm not sure, but boy, he got hit a lot worse than most of the others in terms of timeout from electric and using batteries or whatever. Tough. You can't have, whatever, even if you've got batteries, I mean, lost an hour or maybe two, and then you're done. Anyway, so I hope Steve's back soon, and we're looking at the E-mini 10-minute making a potential U-shaped pattern, F/B, that on the 10-minute, just make the parameters real clear. It looks as if the market doesn't want to trade a little higher, but you'll only know if the E-mini goes from 249, is at 240, 24.94 right now. It needs to go to 24.96.50 in the next 20 to 30 minutes. If it does that, then we could see another rally instead of pulling back. We've done it. We've had most of the digestive phase that I was expecting from yesterday. We'll see what happens. But a close under 24.92 suggests be careful. 24.89 will be next. So that's the way I'm looking at it, just near term. Meantime, back at the ranch, I'm hoping to be here tomorrow at this time. I have a ribbon cutting I have to go to at 11. I hope I can be back in time. I'm just not sure yet. And if not, I'll try to tape the show at 8 o'clock tomorrow morning. So it'll be a repeat, but we'll see what happens. I'm just saying, just giving a heads up, there's a chance that I might not make it for the show live, but I will be doing it. If I cannot, I'll be doing it at 8 o'clock. If I'm able to do that and we have it taped, that'll be good. So let's make it real clear right now. The Dow is in leg C. It made a new recovery high. It's under the all-time 22,179 high of the 8th of August. Dow, for a change now, it was before, then it wasn't, but now it's back to leading. But it isn't leading in the sense that, that's today. It's not leading in the sense that it's made a new high, whereas the S&P has made a new high. And just pulling back fractionally, made a new high today. It's an all-time high, leg C. So I believe that until we make at least D's, the market should be going higher and pullbacks will be moderate and quickly recover and try to recover very quickly, even intraday. We'll see. And the Qs could survive here. I mean, it's not Apple, it's not just Apple, it's other stocks. I'll be back, as I say, tomorrow. And thanks for being here. Have a wonderful day. And check out my opening call. Hope you find it lucrative and informative. Have a great day.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.